Imagine you're the strongest swimmer in the world. Years of training, perfect technique, Olympic endurance, muscles that never quit. You dive in with complete confidence. But you're swimming against a raging river. Every stroke forward gets pushed back too. Your perfect form means nothing. Your strength becomes useless. The harder you fight, the more exhausted you become. Finally, the current wins and sweeps you backward despite all your skill. That's exactly what happens when you buy stocks while the MTG Market Timing Model is screaming, "Wait, sell mode," when the market's trading below the 50-day moving average with institutions dumping shares. You can pick perfect chart patterns, execute flawless entries, follow every technical rule we've taught you, but if you swim upstream against institutional money flows, you're nearly guaranteed to lose money, despite doing everything correctly. Market timing determines whether everything else works. When your market timing is wrong, even perfect technical analysis becomes worthless.
This totally changes how I think about my career transition. With traditional investing, I never worried about market timing because I was buying and holding for years. Short-term momentum didn't matter, but swing trading? I need to know when the big money is flowing with me or against me. Having this simple master control means buy mode supports my technical skills, while wait sell mode protects my money when I would be fighting that upstream selling pressure. This framework gives me structure during my career change. One decision controls everything else.
After making the jump to full-time trading, this market timing model has completely changed everything for me. My marketing background taught me to follow systematic processes, and now that same thinking controls how I trade. Buy mode means I can go full position sizes using our MTG formula because the current is flowing with me. Wait sell mode means I step aside completely. I don't care how amazing a setup looks. I'm in SOH mode, out of the market and protecting my capital until things get better. This simple strategy kills the daily decision fatigue that could wreck my trading income. Just one morning assessment tells me my whole plan for the day. Success comes from swimming downstream with the smart money, not fighting upstream against forces I can't beat.
This makes complete sense. You don't build structures against natural forces, you work with them. The MTG Market Timing Model shows me when the forces are working with us instead of against us. When the S&P 500 stays above its 20-day moving average with good price action, that tells me we have support. When it breaks below with distribution days accumulating, we're fighting selling.
Here's the complete MTG Market Timing framework that keeps you swimming downstream with the money. Buy mode criteria. First, identify the dominant index, usually the NASDAQ, but sometimes the S&P 500 when it's showing stronger leadership. Then confirm that the dominant index is trading above its 20-day EMA with buying support. IBD follow-through days confirm between day 4 to 7 of rally attempts with 25% volume increases above average. Leading stocks breaking out successfully with strong relative strength. Distribution day count at 4 or fewer within the past 5-week period. Wait sell mode criteria depend on severity. This is crucial. Light conditions like breaking the 20-day EMA during early rallies might pause new positions temporarily. Severe conditions like trading below the 50-day moving average with heavy distribution require liquidating everything immediately. 5 or more distribution days within 5 weeks, combined with volatile price action, signals distribution. When the market breaks below the 50-day moving average, you're swimming upstream against unstoppable selling pressure.
This framework protects my trading account from costly mistakes. Before understanding market timing, I might pick a perfect setup, but execute it while institutions are selling heavily. The daily assessment tells me which current I'm swimming in. Buy mode means I can use standard position sizing and actively look for opportunities. Wait sell mode means capital preservation takes priority, so I reduce exposure and raise quality standards. When interruptions happen during my trading time, I don't panic about decisions. The binary framework already determined whether I'm swimming downstream or fighting upstream that day.
Here's what pros know. A rising tide lifts all boats, and all boats sink when the tide goes out. About 80% of individual stocks move in the same direction as the broad market trend. During confirmed bull markets, even mediocre setups often work because buying lifts everything. During bear markets or distribution phases, even perfect technical patterns fail because selling overwhelms individual analysis. This flow concept applies across all markets. In cryptocurrency, you'd look for similar reversal patterns on heavy volume after significant sell-offs rather than formal IBD signals. But the principle remains identical. Align with momentum, don't fight it. The MTG model transforms you from individual stock picker, fighting currents, into decision maker, flowing with massive money movements. Buy mode means swim downstream with the current. Wait sell mode means step aside and preserve capital. This works by lining up with reality using objective, measurable criteria.
I learned this the hard way. Blew up my account fighting the market when I should have just stepped aside. Now, I keep it simple. When the market's flowing with me, I trade. When it's not, I don't. Saved me more money than any fancy setup ever did. The hardest part is not learning the signals. It's actually following them when you really want to take that trade.
This simple method gives my family the clarity they need for our investment decisions. When I report our quarterly performance, I can show exactly why positions were entered during buy mode, when odds of success were in our favor. During wait-sell mode periods, the strategy protected capital by avoiding fighting the trend against heavy selling. My father can see this is disciplined investing, not gambling, because we're following clear rules instead of gut feelings. Using engineering principles to understand market flow, that's what gives my family confidence. We are protecting our wealth the right way.
Your daily market assessment determines which direction you're swimming. Step 1. Identify the dominant index, usually NASDAQ, but sometimes S&P 500. Then check that index's position relative to its 20-day EMA with trend context evaluation. Step 2. Count distribution days within the current 5-week cycle. This becomes a mandatory daily habit. Step 3. Assess leading stock breakout success versus failure rates using relative strength analysis. Step 4. Identify current mode, buy or wait sell, based on criteria, not opinions. Step 5. Adjust portfolio management approach accordingly. Exposure levels, position sizing, and quality requirements. This assessment determines whether your trading skills work with currents or fight against unstoppable forces. The MTG Market Timing Model becomes the master control that governs every other trading decision. Market timing determines when to apply pattern quality assessment, how aggressive to be with risk management, and when execution discipline pays off versus fights currents. During buy mode, use the full MTG methodology with confidence. The current flows with you. During wait sell mode, enhance every requirement because you're swimming in dangerous conditions requiring superior preservation techniques. Here's what makes this powerful. MTG traders have avoided the damage of every major market correction since 2002 thanks to our market timing model. When markets start to get ugly, our timing model kicks in to get us out of positions before the selling intensifies. We then sit on the sidelines in SOH mode, sitting on hands, as we call it in the chat room, until conditions improve and we get back in. Most traders without market timing models give back all their profits in the first major market correction because they have no way to get on the sidelines when conditions turn dangerous. This isn't just theory, it's an automatic protection system designed to avoid significant losses when markets enter correction periods. Instead of juggling multiple complex factors simultaneously, everything flows downstream from one daily determination about current direction. Professional traders never fight currents. They identify flow direction and align accordingly. This foundation prepares you for advanced portfolio risk management, where mode-based adjustments become automatic wealth protection protocols. Your market timing assessment could be the difference between swimming downstream toward consistent profits or fighting upstream against currents that exhaust your capital. Complete this critical exercise. Analyze the current market conditions using the MTG Market Timing Framework. Check the S&P 500's relationship to its 20-day EMA, count distribution days in the past 5 weeks, and assess leading stock breakout success rates. Identify whether current conditions support buy mode or require wait-sell mode positioning. Document your analysis and share your mode determination with fellow MTG tribe members for peer validation. Consider these essential questions. Are you currently swimming with currents or fighting against them? How would your recent trading results differ if you had followed mode discipline? What adjustments will you make to align with current flow direction? Remember, perfect individual skills mean nothing when swimming upstream against money flow. Master the current direction first, then apply your technical expertise